Markets are going to open a little bit weak this morning, nothing dramatic. We're going to retest this 20-day moving average again today. If we break that, of course, the next level of support is going to be the 50-day moving average. That's probably going to be the majority of the downside risk here short term, will be the 50-day moving average. So there's a potential here. We see a bit of a rotation to other areas of the market. Technology stocks in a lot of portfolios, discretionary, etc., are probably well extended at this point. Those need to be sold off a bit back to portfolio weight, which will potentially put some money into areas like healthcare and utilities and REITs that have been underperforming this year and are underweight in portfolios. But here's what you need to know before the bell this morning. As we've talked about over the last couple of weeks, we've been on a very strong buy signal for the market. And that's been the one thing really kind of driving this acceleration that we've seen in the markets. And we got very extended. Of course, we got into 3 standard deviations above the 50-day moving average. Again, technical mumbo jumbo, don't worry about it. It just means we'd really gone a long ways very quickly. Markets were very extended above their longer term moving averages. So a correction was likely. Now, we said that last week that if we trigger a sell signal, that would likely, lead you to expect a bit more weakness here, at least over the next couple of weeks as we kind of go through that signal process. Well, on Friday, because of that sell-off, we actually did trigger our money flow sell signal. The MACD is on just the cusp of triggering right now. Any weakness today, and again, markets are expected to open a little bit weak this morning, but if the markets close lower today, even by a small amount, we will trigger that MACD sell signal. Now, historically, does that mean markets have to have a big correction? Absolutely not. But it does suggest that in the short term, prices will likely be under pressure to moving higher. So markets could either A, just consolidate sideways, just do a lot of chopping around, kind of like we saw in May and June. The markets just kind of chopped sideways for 45 days before this breakout that we saw. So we could see another one of those patterns where we kind of step up the ladder a bit, markets just kind of trade sideways for a bit, work off this overbought condition, moving averages catch up, and then the market makes a move higher. Or you're going to get a correction back towards a level of support, works off this kind of overbought condition, gets these sell signals back into alignment to where you can trigger the next buy signal and then have your next advance in the markets. All of this suggests that the month of July and August could potentially be a little bit weaker in terms of price performance. So if you've got big gains in stocks, probably not a bad idea to take a little bit of money off the table here, just kind of sit back and wait. Again, earnings season the earnings season could be a little bit of pressure on stocks. I'm not saying that it's absolutely going to be the case, but again, the bar has been set fairly high for companies in terms of earnings, and the economy is slowing down. Even though we are seeing a drop in inflation, higher interest rates and that impact of higher interest rates still working its way through the economy as well. So that kind of lag effect still kind of catching up. That could certainly put a bit of weight on prices of companies, particularly during earnings season, if those earnings don't hold up to estimates. And again, I'm not saying they won't, but there is that risk that we could see maybe a pickup in some of the disappointment, or at least some guidance of companies kind of guiding down here a bit, getting some of this more exuberant expectation of a recovery in the markets, bringing that down just a little bit. That could weigh on stock prices here, at least short term again. But this will all be part and parcel of watching what these signals do. If these signals continue to deteriorate, it is going to suggest a little bit weaker price action in the markets. So that's what you need to know before the bell this morning.